everyone. Welcome back to another episode of In Studio. I'm Casey Tierney with the LegalTech Fund. Today, I'm joined by Emery from Confido Legal. And Confido builds the financial rails that help law firms move money with less friction. They simplify everything from getting paid to managing trust accounts to sending funds out, all while keeping firms aligned with all of the rules that make legal so unique. This is Emery's second time with us in the studio, and the company has grown quite a bit since his last visit. Emery, great to have you back.
It's great to be here. Thanks for having me.
Well, let's jump in. So you've always operated at the intersection of finance and legal. What shifts in the market over the past year have made that intersection even more important today?
Yeah, I would say the first big shift is a real shift towards faster payments. We have some new, in the United States, we've been running on ACH for decades to move money between banks, and now there's faster payment rails coming out for bank-to-bank payments, particularly with RTP, real-time payments, and FedNow. And with that, there's a lot more opportunity, especially to send money much faster than before. And as a result, consumers are getting more and more trained that they can get their money faster and faster and faster and more digitally. And so there's a real kind of consumer pull towards faster payments, especially when they are due money. That's number one. And then number two, just the AI battle in fraud is really raging beneath the surface. I think a lot of people don't realize how good fraud is getting, especially with the new technology, as technology is evolving. And it's a real arms race between those who are trying to combat fraud and those, fraudsters out there who are trying to commit it. And so we're seeing a lot of the more exposed payment methods like paper checks, for example, becoming a real issue for the financial system. So I'd say that the two biggest ones are the faster payments and some of this new era of fraud.
I like what you said about the clients wanting faster payment. I think also law firms now expect seamless client experiences, kind of relatedly. Where do you still see gaps today when you think about money movement inside law firms?
Yeah, I mean the biggest one and the one that we think about the most is definitely the paper check. I mean, both on the receiving end and the sending end. I mean, it's extremely prone to fraud now. It's very easy to get an account number and routing number from the mail. And that's enough to run, a debit against your account. So paper checks are becoming a real kind of vector for fraud. Also, they're just not integrated into the tech stack that you're using. There's not a lot of tools to, for example, auto post a payment that comes in. So you get a check in the mail from a client and you have to figure out, okay, who paid this, what client was it associated with, and someone actually has to go in and manually do that unless you have, some type of kind of system set up to do that automatically. But I have not run into a firm that has done that. So, and then other kind of, I would say, offline payment methods like wire transfers, better than checks in terms of fraud slightly, but still a sort of a non-integrated method where there's a lot of manual work associated with both sending and receiving those. So I'd say kind of the biggest trend is towards more integration.
And would you say that transparency and integration is what's really like driving the demand for deeper infrastructure, like inside case management and practice management solutions, for example?
Yeah, I mean, I think that is a big driver. I mean, a lot of people, firms, rightly so, don't want to spend a lot of resources, on the receiving side, figuring out who paid what and posting that into the system. Plus, anytime you allow kind of those offline methods, you're going to get slower payments. And I think some firms are realizing, especially those who have accepted primarily checks or even digital payments in a non-integrated fashion, and then moved to like a fully integrated digital payments acceptance stack. And all of a sudden, we just had one firm, small firm, $30,000 showed up in the bank account, more in the bank account the next month after implementing it, because they basically pulled that cash flow 1 month forward for a good percentage of their payments. So we don't think a lot about cash flow, and I don't think firms think enough about cash flow, but there's real dollars there that you can, use to pay yourself, to pay your partners, to invest back in the firm, if you can pull forward, if you can shrink your AR to cash cycle even by, a couple days or a couple weeks.
Right. So some of it sounds like some of the just transparency, where did this money come from, but also working capital benefits of being able to bring in payments sooner than otherwise would have potentially.
Yeah. And I would say it's not just cash too, like the likelihood of payment is impacted as well. So you can get a pretty big impact on profit by focusing on the collection process, because all of the if you're billing on you have an hourly invoice, the legal work's already been done. So if you collect that or don't collect it, or if you collect, 90% of it versus 85% of it, that's going to have a massively outsized impact on profit, since there's really no offsetting costs there. So say cash revenue, and not just any revenue, but highly profitable revenue on the collection side.
And in very exciting news, you recently expanded into digitizing the disbursements side of things for contingency firms. What would you say convinced you that part of the market was ready for this sort of change?
Yeah, I mean, that was an interesting thing that we didn't really realize until we were deep in the legal market, that there was this whole other segment of law, multiple practice areas operating, exclusively or primarily on a contingency fee structure. And the payout process when a client is due, has a settlement or award coming to them, is done primarily today on paper checks, much more so than the acceptance side, in terms of a percentage. And so we felt like it was a huge opportunity to digitize that process for firms, get those same kind of workflow improvements that we talked about on the payments acceptance side, while also giving, CFOs better financial controls, better audit trails. My favorite thing that I hear quite often is, I need to send a paper check to my clients because I need a paper trail. It's like, just because they're both made of paper does not mean that you get a paper trail with a paper check. So huge like workflow, financial control components, and then massive fraud implications. Most of the big firms that we've talked to have been hit multiple times, because every time they send out, a check in the mail, that's their account number and routing number for their trust account, which is enough to, run a debit against the account. So initially, we set out to solve all of those problems, and there's real benefits there. But what we found is the real value in the product actually came from the client side. As I mentioned before, one of the big trends is consumers expecting faster digital payments. And what we saw was that the product really, the bigger benefit beyond the workflows was the fact that like clients are demanding this, and they really, the firms that are implementing this process are really able to kind of delight those clients right at such an important moment in their case, when they're actually getting their money. So, what started as a workflow tool really became a client experience game changer for plaintiff firms.
That's awesome that you're seeing kind of success and even delight on both sides. I'm curious, as you've scaled your company, what have you learned about the financial workflows that maybe other legal tech founders tend to underestimate?
Yeah, I think the important thing, well, first of all, and this is somewhat self-serving, but I do believe in all my heart it's true, is that legal is really weird. I mean, the fact that
Yeah.
these law firms, you've got, thousands, tens of thousands of law firms really operating like a bank for their clients with some regulation, but really like not a lot of regulation. I mean, the ethics rules do a decent job, but to be holding that much money for that many people is pretty insane if you think about it. And so under really understanding that, and understanding how the rules that are there, the ethics rules, the rules of professional conduct, do impact money movement, accounting, lending, like all of those things, is really important. For example, we just talked to a legal tech firm that runs a referral network, attorney referral network. And so they have money moving between trust accounts basically to pay the referring attorney when the settlement comes in. And they've run into all sorts of different interesting money movement challenges that are solely legal issues. So there's a lot of complexity there, and that's why we exist and what we nerd out on.
Yeah. And hopefully more partnership opportunities for you as well then.
Yeah, I mean, it seems like every week we get a new interesting opportunity, coming in the door of some more money movement in legal that we haven't, we didn't even know existed. I mean, legal and financial services, money movement, payments are so intertwined. It's it's a really interesting space.
And then if you throw sort of some of the trends with AI and AI systems in as well, how do you see maybe the financial layer of legal changing with AI?
Yeah, I think one of the biggest barriers right now to really to major change is just like the interoperability of AI between like disparate systems. There's a lot of talk about AI agents and things like that, but it's really hard still to to connect different systems. So I think there's going to be still, and it maybe even more, a ton of value in embedded payments and finance into those main workflow tools. And then once you've created that that tight integration, then if you're a billing system, you can build a like agentic payment poster that accepts kind of like unattached payments that are coming in and figures out where that should go. But if the kind of the payments process is not digital, it's not integrated in the first place, today at least, it's going to be really hard to create those kind of agent workflows to do some of those back office financial, accounting and reconciliation, to run those processes. So, and then secondly, I would say it's super interesting, the trend of, I used to kind of think about it like the business of law tech side was so different from the lawyering, tech side. But, with Clio's some recent acquisitions and more, the business of law is converging with the actual legal work on the tech side. So it's really interesting to see those things come together. And I think we'll see more and more, that line between business of law and lawyering tools becoming more and more blurred over time.
Yeah, I think we're seeing the same sort of trends. I will say though, I'm curious your perspective. it seems like at least in the short term, that interoperability, which is so important, could be harder now that you're needing to think about legacy systems and AI systems and keeping everything kind of talking to each other. Is that your assessment as well?
I wouldn't say yet it's a major challenge for us, but it's definitely a major opportunity for the future, as all these systems do need to, to talk to each other, to, like you have a business of law, a platform on the plaintiff side, that's basically, calculating what this client, is due on the, when the settlement comes in. And that's integrated to, a system that does like the automated, demands and all of those things. And, there are financial components to, to all of those things. Maybe you want to take the client's payment method, at the same time that you're, doing the intake, and the intake is done in a different system than, the final sort of case accounting. So I think more and more, it's just a huge opportunity to, to really be that kind of financial layer between the different systems that are all in today's world needing to speak to each other, and doing that to varying degrees of success. And it's not just a technical problem, but it's also, I think, a lot of tech companies are trying to figure out, where do I stop, and what do I do versus what do I partner for. And so there's a lot of kind of posturing going on, which is causing sort of added issues with respect to integration. So
that makes sense.
Same time.
I think you're kind of hinting at it already, but if you were to zoom out maybe like 5 or even 10 years, how do you think the modern financial tech stack is going to look inside law firms, and where do you and Confido kind of fit into that future?
Yeah, I don't know if 5 years is the right time frame, but I'll say in the future, sometime around then, I think whether it be driven by clients, driven by law firms, or driven by banks and other entities that participate in the financial system and have to bear fraud losses, I think we will continue to see a sharp decline in paper checks. I'm sure legal will be one of the holdouts, but I think we'll see that go away, or become kind of a nominal payment method, both on the acceptance side and the disbursement side. I think we'll see a lot of faster payments. I think consumers, like I said, will demand that. And so firms, especially plaintiff firms, will have the ability to pay their clients in a matter of seconds. And then I think money movement will be fully integrated into the main systems of record for firms, case management, billing systems. And teams will demand that type of automation and will not accept doing that. The posting of payments, the sending of payments manually. And then lastly, I think that we'll see the bank account really eliminated as a meaningful software system. So, of course, money will still be held there. There's important regulations that need to be met, but I don't think, given where banks are, it's really like the last piece of "quote unquote" software that's not integrated into the main tech stack that firms use. So I think we'll continue to see developments where the actual like online banking tools play a lesser and lesser role over time, and it just becomes more and more a way to hold money, and the real like money movement and portal into balances will happen in case management, billing, and accounting systems.
Yeah, I really like that vision, and we both kind of share a fintech background, and so all of that sounds great, and I hope that it comes maybe sooner than 5 years, but we will see with legal. You never do know. But as we
Yeah.
wrap up here, I would love to hear any advice that you have for founders listening and maybe operating in and around legal, fintech, and sort of that intersection.
Yeah, I think the biggest thing that I've learned is it's really important if you're going to layer digital payments, financial services into software, it's really important to have a reason to do that. And the reason could be client centered, it could be firm centered, but there has to be a strong value proposition there. I think there's a lot of swirling rumors that these things can just sort of sell themselves,
Yeah.
and we've continued to see that not be the case, and I think it's especially like adoption of integrated payments and finance is especially challenging in legal um, where paper checks are still very prevalent and are I hate to say it, but a viable alternative to accepting a digital payment or sending a digital payment, and so making sure that if you're going to embed some financial workflows, having there be a clear value proposition is a good way not to waste significant resources and product roadmap time on something that no one's going to use.
Well, that is really great advice, and I hope that everybody listening kind of takes it to heart. Really appreciate you joining us in studio, Emery.
Thanks for having me again. It was great to be here and great to see you, Casey.